On this special edition of Stonkcast, I'm interviewing Max, a prop firm trader who's been in the game for less than 2 years and has already experienced quite a bit of success. We'll break down his trading strategy, why he believes the mental game is so important, and also why he believes trading is quite simple. Stick around for this informative interview. If you want to help us out with the algorithm, make sure to share with a buddy. Don't forget to like, subscribe, and follow us wherever you listen to podcasts. And now, folks, let's roll. Welcome back to Stonkcast, the market show for the average Joe. Whether you're a diamond-handed degenerate or a more conservative swing trader or investor, we've got you covered. If you'd like to support the channel beyond liking and subscribing, make sure to check the links in the description. Folks, we have a special episode today. I've already talked about wanting to do more interviews, collaborations for 2026, and we are kicking it off right today. I got my buddy Max on, who is a trader himself, and we are doing an interview. So I hope you get a lot of information from this, and I'm sure if you have any questions, you can drop a comment in the video, and I'm sure Max will be happy to respond to those. But first of all, Max, how you doing?
I'm doing fantastic. Happy to be here. Finally, it's been long awaited getting on Stonkcast. It's an honor
Yeah.
and a privilege.
Awesome. Well, hey, it's an honor to have you on. I know we've been talking about doing this for a while. So, yeah, really what I want to do is get into a little bit about, really what got you into the markets. We will, cover a little bit of your edge, your strategy, right? And really just any advice that you can give anyone who's getting involved. And then I know we got a couple chart examples as well, so we will definitely make sure to cover those. But first of all, let's just jump right into it. So, Max, for people who may not know your background, how did you first get involved in the markets?
So I first got involved in crypto actually, through a friend. That was my start. And at the time, I was running a detailing business with a friend. That was my first bit of money that I thought was good, respectable. We were doing pretty solid. And then I had a friend start sending me some like crypto signals. He was showing me what he was making, and I was like, dude, like that's awesome. He was like, I want to help out my friends, send them some signals. And I remember making like what I made in a day at the business in like 10 minutes off one of his signals. And I was like, what am I doing here? I was like, I got to learn this as soon as possible. So that's really what got me bought in. And I grinded hours every single day since then.
That's wild. Okay, so crypto was kind of your introduction to the market.
Hmm.
Crypto's kind of a wild beast, so that's definitely an interesting way to
Yeah,
jump right in.
it
What were
was
your initial thoughts about crypto? Like, did you know much about it or?
I was initially um pretty a big fan of Bitcoin. I knew a little bit about it. I love the idea and the concept. Uh, I just when I first learned about it, I didn't have any money, so
Sure.
re-looping around with this friend that introduced me, I started buying crypto. I bought it at 25K at the end of 2023, and then I started getting into actually trading crypto. And he was sending me the signals like the beginning of 2024, and I started trading crypto. I was 9 to 5ing the charts basically. Like it was not good. I
Just
didn't realize that less was more when it comes to trading. I was trying to just brute force through the charts.
sure. Yeah, no, that definitely makes sense. Um, early on, what would you say attracted you to trading? I guess like the freedom, the challenge, the money. What was it for you?
A little bit of everything, honestly. Like I always wanted freedom. I knew that there was alternative routes. I chose not to go to college because I thought I would find something, a higher leverage way to make money and try to put the power in my hands. So I that's what I really liked about trading was that, you know, it was even if you own a business, like you still, if something happens, you still have to go in and work. But with trading, you can truly just step away whenever you need to,
Very
and it gives
true.
you
Yeah.
the freedom to be able to do other things with your time.
Right. Yeah, I think that's kind of thing that really attracts, most people. Um, I would say is like the freedom of trading, being able to kind of do your own thing, make your own schedule. That's pretty common. I feel like for most people to kind of look at that aspect of it and think like, hey, this is what I want to do. But a lot of people, they jump in and they don't realize how hard it can be too. So there's that component.
Hmm.
Um, okay, awesome. So what did your early, learning curve look like for you?
It was it was long drawn out, to be honest. It was pretty long drawn out. The reason for that was because I was able to make like large sums of money right away. And even after I stopped taking signals, I still kind of got lucky a couple times, made a lot of money, and I was like, I know what I'm doing. I don't need a journal. I don't need to do any of that stuff. I'm a pro. But I got humbled pretty quickly. So
Yeah,
that was a drawn out process of you know, making a lot, losing a lot,
yeah.
just
Wait,
constantly getting humbled.
I think everyone's kind of been there at some point.
Hmm.
So you kind of talked about, during those early stages there, kind of more or less getting your face ripped off and getting humbled. So, what were some of the things that you tried early on, I guess, that just simply didn't work?
Hmm. Really, I was over leveraging. I was trying to make every trade a home run, instead of just trying to get on base. Because I was like, oh, this is gonna be how I trade. It's gonna be super high risk, and then just that's my strategy. It's gonna be one trade is gonna make up for all the losers. But the number one rule of business is to stay in business. And if you're getting liquidated, you are not in business and able to trade. So that was a huge mistake I made. I probably got liquidated like 3 times in the first couple months of trading. And it was like, a good amount of money. I probably lost 7 grand learning how to trade. That was like my tuition until I finally sat down and I was like, all right, like maybe this whole risk management system isn't how I thought it would be.
Yeah. Yeah, I think most people have been there. They a lot of people like to talk about how you need to be focused more so on what you could lose and not necessarily what you could win when it comes to trading. And I think that's a concept that takes people, it takes a while to really grasp, but it's true. It's if you're always focused on what you could win, then by default you're ignoring the fact that you could be just flat out wrong on a trade. And that's how you end up in situations where you kind of, people blow up accounts. I've blown up multiple accounts in, my years of trading. And a lot of it just simply stems from a lack of discipline and a
Hmm.
lack of recognition of the risk, So
Yeah,
that's great. So thanks for
it's
sharing that.
it's it's like I said, the people that just focus on getting on base, staying in the game, are the ones that hit more home runs than the one that just is swinging for the fences every time. Because that's,
Right.
you're gonna strike out, you're not gonna be even in the game. So the people that focus on not losing are the ones that have the biggest wins because they're able to be patient, sit, take their, low risk to rewards, and then eventually they just hit, a crazy trade. That would have never been possible if they went for the crazy trade every time.
And I feel like a lot of it too is just greed. I don't know how you feel about this, but in my
Huge,
experience, like,
huge.
a lot of times it's just simply greed. When I'm greedy is typically when I ignore my rules. It's when I have FOMO. It's when I'm chasing, right? It all stems from greed and never having enough, right? So
Hmm.
I think some of the best traders out there, because of the fact they're focused on what they could lose, right, instead of what they could make. It actually
Exactly.
puts you in a position to make money. It's kind of like the opposite. So,
Exactly. Once you have it, you focus on protecting it, and you're able
right,
to trade with way more clarity. You're like, okay, I don't need to take this because, my
right,
bills are paid. Like, rent isn't due. I don't need to hit a home run. It gives you the clarity. So that's
right.
why you definitely should work, have a source of income as long as possible before you go full time.
Yeah, that's a good point. That's a good point too. You definitely need to have a source of income.
Hmm. I know people that were making over 10 grand a month trading before they even quit their job. They were like, nope. Once I hit 10K a month, 3 months in a row, then I'll go full time.
Right, right. No, that's good. And a lot of people kind of prematurely jump into the full time realm because it sounds great, right? It sounds great to be your own boss. Sounds great to have all this freedom, flexibility, whatnot. But all it takes is one bad month, right? One bad
That's
month,
right.
and then you're screwed. So, yeah, I've heard some traders also say that they like to have 3 to 6 months worth of living expenses, saved up, right, before they jump into the markets. And even then, they're like, you should have at least 50,000 in your trading account on top of that. So like, it just depends. Different strokes for different folks, but the point being, be prepared, right? So I think that's
That's
great.
right. Hmm. You never
Looking
know when
back,
a bad month as well. You never know when a bad month of trading could come.
that's
For
true.
example, December and January were like, very brutal for me. I didn't make a lot of money, but thankfully, I built up a nice cushion to be able to live through those times. And if you're a beginner trader and you may go full time too early, it's like, can you really sit through 2 months without making a turning a huge profit?
Yeah, that's a good point. That's a good point. That's usually when people get a bit too antsy, right? Because they're not having any setups. They're sitting on their hands. They're watching other people making money. And that's when they become undisciplined and they take premature entries. And,
1,000%,
obviously, you know how
thousand
that
percent,
goes.
1,000%, 1,000%.
So, looking back, what mistakes cost you the most financially or mentally? I know you talked a little bit about, at one point in time, right out the gate, losing like 7,000. That had to be a huge emotional weight, and just from a mental aspect. So, what kind of mistakes cost you that money? I guess is my question.
Really just not going into the market with humility and not treating my day to day um with humility because like I said, like I wasn't journaling, I thought I knew everything. Um, what was the question again? Sorry.
No, you're fine. So what were some early mistakes that really cost you? I guess. What were some of the
Mm-hmm.
biggest mistakes that you made early on that you were like, I can't do that again? And I know you've kind of touched on some of this stuff already, right? Like
Hmm.
risk management and being patient, things like that. But is there anything
Hmm.
else that kind of stands out to you? I guess.
Yeah, I mean, just realizing that, the market is not causing me to lose, right? I'm causing me to lose. No one is holding a gun to my head, forcing me to take bad setups, right? And like just like that, in the last 2 months, I didn't make a lot of money because there weren't a lot of setups for my system, but I also didn't lose any money. And once you reach a certain point, capital preservation becomes your number one priority over making money and flipping accounts and stuff like that. Because when you focus on capital preservation, it goes hand in hand with, being able to grow and having a stable system. So I was taking about 4 to 5 trades a week because now that I'm trading futures for the past 8 months or so, um, I went from 4 to 5 setups a week to like 1 to 2,
Mm.
and that was very difficult for my psyche, just decreasing my trade frequency that much. And it was like, all right, I know that through back testing, I know that this is very normal. These market conditions will pass for me. And as soon as you start looking at other people that are making money right now, because there's tons of people swing trading and stuff making a ton of money, but as soon as a beginner trader sees that and it's like, oh man, I gotta do what he's doing because he's making money right now. Then all of a sudden his strategy is going to slow down in the market and yours is going to take off and you're going to go back to taking 4 to 5 setups a week.
Yeah, that's a good point. That's a really good point. And that kind of leads me. You mentioned like futures there, right? And that kind of leads me into, I guess, my next question. How would you describe your trading style today? Right? There's obviously a million different ways you can skin a cat. There's a lot of different ways people make money in the markets, but for you in particular, what have you found working, I guess, or clicking with you?
So today my strategy is high win rate, low risk to reward, pretty moderate frequency. Like I said, 4 to 5 a week. That's almost one a day. Um, Typically 4 to 5 a week. Sometimes I might take two setups in one day. That's not recommended. I like to step away one trade, but yeah,
Okay.
it's a lot. It's the best strategy for you mentally, I think, because just having that win rate, it's like you can afford to sit there and not be confident in a setup and just pass on it because you know there's going to be one tomorrow. So when I was trading crypto, I was like, semi day trading, semi swing trading. Um, and I was like, 7 p.m. on a Tuesday, and my setup is here. Like it might be a B or a C plus setup, not even an A plus. And it's like, all right, I have to take it because I might be sleeping for the next one, or I might be doing something, and it was really bad. I was spending like 12 hours a day on the chart, which
Yeah,
you
I could
definitely don't want
definitely.
to do. Less is more.
Right. Yeah, I could definitely see how
Less is
that could
definitely more.
happen, especially with crypto, because it's 24/7, right? It never stops. So I've always wondered that about crypto traders. Like, man, how do you really set, and really the same for futures, right? Because futures trade nearly 24/7, not quite, but a lot more active than
Yeah.
equities. And so that's always been kind of one of my questions from the outside looking in. Like, how do you set parameters around that so you're not over trading, right? So,
hmm
um, okay, got it. So, I
Well,
guess,
to answer that a little bit,
yeah,
um,
go ahead.
the reason I stepped away from crypto was because I was trading it semi-similar. Like I would get on at like 8:30 and kind of there would be some volatility at 9:30 and I would try to catch a trade in the morning and I'd probably close it in the afternoon or if it was like more of a swing trade because it was a higher time frame setup, hold it a day or two. But I noticed a lot that after April, May 2025, dude, the New York Open was like just dead. It was no different. And I was like, I had the market experience to be humble and realize like, okay, am I gonna try to force my strategy and try to force my hand on the market, or am I gonna let the market decide how I'm gonna trade, right? Which
Right.
the second option is the way to go, obviously, because as a retail trader, you can't do a thing. You can't do a thing to make the market do what you want to do. But
That's
I
a
started
that's a good point.
looking into futures. I started right away. Um, I back tested it, of course. You don't do anything without backtesting as a trader, without collecting as much data as you can. So this is a probabilities game. It's not gambling. If you're treating it like gambling, if I would have just went straight into futures and be like, oh, I know how to trade, and then got up, popped in a 9:30 open, traded, I would have, you know, it would have been a long ride for me. So I back tested a ton, and then I started doing some forward testing, which is right live trading demo. I did 3 weeks of demo. I realized that what have I been doing trading crypto? This is way easier. Um, I won my first 16 trades, paper trading futures, and I was like, this seems too good to be true. So I was way more disciplined because I actually had parameters. I had guardrails. I was like, all right, I get on the chart at 9. I get off the chart before 11. I journal every single trade, every single setup, every single day in the market, very detailed journal. And it definitely increased my trading a ton, so much. So after 3 weeks, I decided to go for it. Um, went for my first prop firm, first eval, and I passed it in 2 weeks. And I've been trading futures since then.
Wow, that's awesome. And I have a few questions around prop firms before we get there, two things I want to touch on real quick. You mentioned back trading or back testing, excuse me. How were you doing that? What kind of platform were you using? Is that something you were doing in like TradingView or something else, or what did that look like?
hmm So initially, yeah, I did it in TradingView in the replay mode, but there's also FX replay as well, which is like more meant for back testing. I think it's like $20 a month. So it's definitely worth it as a trader at any stage because it holds all your progress and it gives you just a lot more data. At the end of the day, you
Did
want
it
access to more data.
did it require any coding knowledge to do that? Because I've had some experience with backtesting, and in a lot of cases, you need some form of that in order to, be able to backtest a strategy, right? So I guess my question is, as far as ease of use, right? What was it like for you backtesting?
Oh, it didn't take any coding for me because, like I said, I started with TradingView and it has a replay mode where you can just press it, it take you to a specific date. It lets you take you to the first bar available, like in your plan. Because I know depending on the time frame, it gives you a certain amount of bars you can go back depending on your plan. So I think the free one gives you like a decent amount of data.
So how did it know when you're going back in time, right? How did it know when to stop? Like, how did it know your strategy? I guess is my question. Like, how did you tell it that?
Well, I was doing it. I'm like a, you know, purely technical, analytical trader. I'm trading the charts, right? I'm not trading news. Uh,
Right.
so it was really just getting that chart time in, getting
Right,
on.
but I mean, like, I guess my question is, when you're back testing it on TradingView, was it telling you like, hey, in the past 30 days you would have had this many winners, this many losers, or were you just
I see.
manually going through like previous chart data and pointing out with your own
hmm
eyes manually, like, this is my setup?
Yeah. So I would go on at like rewind to 9:30 open for specific days. I would back test like a week at a time, probably I'd say. Um, I'd go to the 9:30 open. I'd do set up my chart, mark out all the highs, lows, imbalances, stuff like that. And then I would treat it like I was, actually trading in a live day. I'd tap through every single bar, wait for the setup to come. If I saw my setup, I could take it. I could press buy on TradingView, and it would give me
Okay,
a simulation
got it,
um
got it.
for how many contracts I want, whatever. Then I would go through it. It would either hit my stop loss or take profit that I set. And then as long as you're in replay mode, after you take all the trades, once you exit, it gives you your stats.
That's cool. Okay. Yeah, and I mean, TradingView is a great platform. It's actually um, one of the codes that we have in the description on Stonkcast videos, right? You can get $15 off.
Oh,
They
nice.
have. I always talk about, it's usually the platform I use when I'm doing Stonkcast videos, right? Each week for crypto in particular, reviewing Bitcoin briefly when I'm going through like major indices, and so I'm always telling people like, hey, TradingView is a great platform. If you want to get involved with it, you can get the code, get $15 off. But they have so many different tools, and I haven't even gotten into all of it. And so that's why I was kind of asking some further questions about the back testing
Mhm.
there, because I know that TradingView had that capability, but I didn't know to what degree. So that's really cool. So you were able to utilize that. And then one other thing before we hop into the prop firms, you mentioned journaling, which I'm a huge advocate for. I think journaling is very important. I think if trading is a business, right?
Mhm.
How many businesses don't keep track of the numbers? None of
That's
them,
right.
at least none that are successful. So why would trading be any different? So I've always been a big advocate for that. I use something called Edgewonk. I don't know if you've ever heard of it, but It's literally all online, and it can track a lot of different data points. So it's a very analytically driven, web browser based journal, right? But for you, what are you using for journaling? Are you just manually, journaling in like a notebook or online, or what does it look like? And what are you
I
tracking?
I have a Google Doc, and it's like formatted for me to input all the different things like time I entered, the risk reward, if I got how much sleep I got, if I had even coffee too. These are things I
Love
track my
that.
performance. Yeah,
Yeah.
because
Yeah. No, those are all
I
good
I
data
track
points.
if I worked out before trading in the morning or not, because all these things affect you. Because
Yes.
really, you are the instrument, right? No matter what you put on the chart, you are the instrument. You're the machine
Th-
that's executing. So
That's
if you're not
awesome.
tracking your machine, you're flying blind. And then when it comes to trading itself, I put a screenshot and then I go like really in depth and talk about it because they say the best way to learn something is by teaching it. And the way I kind of journal, it's like I'm going over it like I would be teaching someone. And so it really, really made me, honestly, it's like the biggest thing that turned me profitable because without
Yeah.
journaling, you're flying blind, right? You could track your trades and know your win rate, but knowing your win rate doesn't matter if you don't even know like what type of trades you're taking, or how often your setup comes, or at what time it comes, or if certain market conditions may warrant different types of setups, different variations, and stuff like that. And these are only things that you can really, really, really be cognizant of if you're writing it down, reviewing it, all these things.
No, 100%. 100%. And I couldn't agree more. Um, trading is, or journaling rather, is so important. Especially when we talk about like different market regimes, when we talk about, the changing of a bullish market to a bearish, like
Mhm.
your setups are not always going to work the same in every single market regime. So being able to have those data points, I think, is huge. And just from a trading psychology standpoint, I mean, I did a whole series on the Disciplined Trader by Mark Douglas. I'm not
Hmm.
sure if you've read
Great
that
book.
book or heard of it, but yeah, Mark is great, and he put out that he put out
Great book. Great book.
trading in the zone.
Yeah. Yeah.
He
Yeah.
was,
That's what I'm
the
most familiar
father
with.
of trading psychology, right? So I
Hmm.
mean, ever since I got onto Mark's stuff, as you know, like the way he breaks it down, it's like it makes perfect sense. So yes, the trading psychology, I love, tracking. Hey, did I gym this morning? Did I not? Am I on tilt? What's my mental state? Like, those are all just really
Yeah.
important points. So,
Because these are
thanks for
things you
sharing
can't
that.
track in back testing.
The true, right? 100%. Yeah, you can
Right.
back test a lot of things. Can't back test that. So I
That's right.
100% agree.
That's right. Because if your
Um,
strategy is like a 70% win rate strategy, it's only a 70% win rate strategy when you take that setup 100% of the time. That's the biggest thing because people are like,
right.
"Oh man, the strategy sucks." It's like low risk reward and I'm only winning less than 50% of the time. It's like you suck. Every
Right.
strategy works to a
Right.
degree,
Yeah,
right?
for sure. For sure.
You just
And
have to be good enough to make it work.
yeah, for sure. Well, and I know you mentioned earlier too, like your strategy, you said it's a high win rate, right? Low
Mhm.
risk to reward setup. You also have the opposite of that, where you have some trading strategies that have very low win rates, but the risk to reward is so high, right?
Yeah.
That you're still profitable on it. And I've
Yeah, you're
always
still profitable,
been
but that's stressful, man. That's how it's trying to trade
It is
crypto.
stressful. It is stressful. And I say that to say that I feel like when you're just starting out in trading, or you're new to trading, and by new, I mean really anything under 5 years, in my opinion, right? It's more important to have a high win rate than not, because from a mental standpoint, it gives you confidence, right?
Hmm. Yeah.
Um, so I'm definitely a big fan of that. Um,
You want confidence
okay, and
in your setups and your strategy, not in how much money you make, right?
exactly. Yeah, good distinction there. And I know, I mean, obviously we're friends, right? I know that you have a background in, you know, athletics. You're an athletic person, and I've always been interested to kind of see a correlation for some very highly successful, you know, prop traders that have a background, right, in athletics, because there is a certain thing mentally, right, that makes a person tick when it comes to athletics that actually transitions over really well into trading. So I wanted to ask you, when it comes to like your background, right, in sports, do you feel like anything from that, you know, has helped make the transition into learning how to trade a little easier?
1,000%, honestly, 1,000%. The gym and trading is like the biggest one-to-one correlation. It's like I can make so many examples that use gym analogies for trading and trading analogies for the gym. It's
Yeah.
trading really, the principles of trading apply to like everything in life. Business, working out, sports, life, you know, relationships. The aspects of trading can really carry on to everything. And that's why so many people are unprofitable, right? Because they're worried about being the best trader instead of being the best person.
Mm,
They don't realize
that's
people
good.
want to trade. People want to start trading because it's like, oh, I can work 2 hours and trade from a beach, even though it's not like that at all, right? Um,
Yeah.
People like that, but they never become profitable because they don't go through the steps it takes to become profitable.
Yeah.
And that's why you see profitable traders go on and, maybe start businesses in their free time, things like that, because they're ambitious people.
Yeah. No, that's good. I mean, there's plenty, as you and I both know, there's plenty of you know, wannabe traders online or trying to sell a service, and they're like, look at my Ferrari, look at this house I have, you could have this too. You know, I see ads like that on YouTube, even like all the time, like, you know, for 20 bucks a month, check out my system, this and that. It's like, you know, a lot of these people are just scammy. um and you know, if you were really making that good of money, chances are you wouldn't take the time to like share it with other people. Like, you know, that's kind
Yep.
of always my thought. You know, kind of the
Everyone's
same with
different.
like, yeah, everything's different, but like even with like sports betting too. You know, it's like, okay, well, if you're
That's a big
really
one.
that
Yeah,
profitable, why
that's
are
a
you
big
trying
one.
to sell a service? Like,
Why are you trying to give away your edge, right?
right?
No,
Yeah,
that's
like
that's
why?
that's for sure.
Why are you giving away your edge? Yeah, that's a good
I
point.
used to I used to
Um,
be like 100% in agreement with that, but I kind of like rationalized it and realized I heard someone's perspective that was like, all right, if you had a skill that you could teach people about and make an extra 10 grand on the side, wouldn't you do it too? And it's
right.
like I talked about the income, like the guaranteed income and the clarity it gives you as a trader too, kind of helps. Yeah, there's a ton of scams, but I kind
Sure.
of I was the same way. I was like, just because, or I was like, if you're selling something, you're a guaranteed scammer. Now it's a little different when they got the rented Lambos and this and that, but if they're really putting out and posting their trade recaps every day, showing wins, losses, then
Yeah.
it makes sense because honestly, having that source of income makes trading way easier. And
Yeah, that's true.
on top of that, the legit ones, they're, in their Discord, they're doing weekly reviews, and it helps
Sure.
them stay on top of it because teaching people how to trade is making them better traders as well.
Yeah, for sure. And yeah, let me just clarify. I'm not saying like everyone who
No,
does
no, no,
that
of
is a
course, of course, of
scam,
course,
but
of
you
course.
know, there are a lot of scammy ones out there, but there is something to be said for, you know, the ones that are legitimate. You know, I'm in a Discord that I've been in now for a year. Initially when I got into it, I was very skeptical, but after a year, a lot of the guys in there are legitimate traders, and they just genuinely want to help, right, other people become better traders. And so there's definitely something to be said for that.
Hmm.
So
For
um,
sure,
okay,
for sure.
great. So let's move on. I want to get in briefly to the prop firm aspect of it, because speaking of scammy things, there are a lot of prop firms out there that are scammy, right, and have a bad reputation. I get hit up every other week in my Stonkcast email for like, you know, these sketchy prop
Hmm.
firms that want to do like a sponsorship with the show and things like that. So I guess, what was your introduction to prop firms? How what has your experience been? I guess, and any advice you would give people who are interested in it, I guess.
Hmm. So my introduction was that I knew someone else that was a trader, and we both started trading crypto at the same time. And he, like a couple months before me, even, like I asked him one day, I was like, how's trading going? Da da da. Have you seen Bitcoin? And he's like, actually, I haven't traded crypto in like 4 months. I've just been trading prop firms. And I was like, really? That's crazy. Like, I've been having a, I've been struggling a lot trading crypto. It feels like my edge has kind of faded, disappeared. And he was like, yeah, definitely, give it a try. So I did a deep dive on prop firms, futures trading, went straight to back testing, like I said, because I knew the scammy nature of prop firms. So I made sure I started with Top Step, which is the oldest one, the most reputable. Everyone, they've been around the longest, I think 12 years. They started in like 2014.
Mm-hmm.
So I want to start with them, you know, get a payout, make sure they're legit. Well, I knew they were legit, but after that, I'm now more familiar with prop firm space, and I realized like the top prop firms are, if you follow the rules, you will get paid out. It's people will be trading news or something and they'll try to full port like CPI, and then get denied a payout and be like, oh, it's a scam, even though it's very clearly in the rules, right? So the if you can pass a prop firm, you're a profitable trader because it's the rules are very, very hard. The thing is, it's just like how people will sell, legit traders will sell like a Discord group to teach people how to trade, right? Because why? It's an extra source of income. Prop firms are the top ones don't have anything to hide. Like there's no shortage of unprofitable traders that are blowing a ton of money on evals. I think there's a stat. I think it's like less than 1%. It's like 0.1% of people that try actually are able to pass an eval, an evaluation to get funded. Sorry, I should use more specific terms, but then even less, like 1% of the people that pass, or like 3% get to their first payout, right? And then an even smaller fraction get consistent payouts. So it's like there's really no shortage of unprofitable traders funding these prop firms. They have no reason to be denying payouts unless they're right, a scammy one.
Sure.
So
Yeah,
if you if
and
if they're not in like the top 5 or 6 prop firms that people talk about and use, that are in lists and stuff, you should probably stay away from them. You can test them out after you already have your accounts.
right. And it sounds like you were pretty intentional about seeking out one that was reputable. Like you said, Top Step in around 12 years. So, that's a very smart move there for sure. And yeah, passing evals is hard. I remember I got introduced to like Apex back in like, I don't know, spring of 24. And man, I must have blown up like 3 or 4 eval accounts. Like, and then they just make it so easy, because it's like, oh, pay $15 and you can do it again,
Yeah,
you know?
yeah, exactly.
Um,
And then that's how you end up blowing three in one day.
yeah. So it's like in
It's definitely intentional.
I was kind of at a disadvantage, and I would imagine a lot of people are too, because of the fact that, obviously prop firms, they don't necessarily deal in equities, right? Which has kind of been the thing I've focused on for the past 5, 6 years. It's futures, which is an entirely different ballgame. And so, I kind of hopped in there, like, oh, what's futures? Like, let's get paid. They do great marketing, but that's
It's great.
awesome. So,
Fantastic.
how many evals have you passed?
I have passed 4 total.
Wow, that's incredible.
Yep, yep. 4
And
total. And I think I've blown, like actually blown, um 2 or 3 evaluations.
that's not bad. That's not bad at all for
Right.
being, introduced to, prop firms. I guess the moral of the story, you can agree or disagree with this. Let me know. But when it comes to prop firms and really trading in general, but in this context, prop firms, it's all about discipline, right? Because I
1000%.
mean, how
It's
long
another
when
reason
you
I wanted to start
first
with them.
Right, exactly. I mean, just to put it in context, I mean, you have a lot of people who have been trading for multiple years that blow up evals. How long have you actually been trading? I don't even know if I start off with this question, but like, how long have you been trading?
I've been actually trading on the charts since March of 2024. So
Okay,
coming up on 2 years of like
coming up on two
being
years.
introduced to technical analysis and trading.
So I remember what my first couple years were like. It was drinking from a fire hose. So the fact that in less than 2 years you've been able to pass four evals is very, very, very
Yeah.
impressive.
And I
Let me
started trading
just say,
evals last summer, in July,
right.
July
So even
2025,
so, you had like a year under your belt, basically. That's wild. Um,
right? Because
so
trading is not hard to learn. You find a strategy, you take a few months, you learn it. Becoming a profitable trader is the hard part because, like I said earlier, it's just like working out, right? Where working out is 30, 40% of of the journey of what you look like, and then your diet is like 70%, right? Where with
right,
knowing how to trade is 30% of the battle.
right,
The
right.
70% is the mental side, is not taking bad setups, is not revenge trading, not going on tilt, not blowing all your money on evals.
100%. You don't have to reinvent the wheel, you know? Like
Exactly.
there's a million different strategies out there that have edge. Um, you don't have to build anything from scratch. Like you could do a simple support to resistance strategy, right? You
Yeah.
could there's a
People
lot of
that are
different.
profitable with that.
Exactly. And a lot of them are kind of self-fulfilling because so many people know about them, right? It's part of
Exactly.
the reason
Just
why
like
technical
fibs. Yeah.
analysis works. So,
Yeah.
that's a good point, good distinction. So, okay, so you passed four evals. How many funded accounts do you have then? So does that mean you have four funded accounts?
At the moment, I'm on two.
On two. Okay. And are
Hmm.
they linked together? Like you do one trade, but it applies to both?
Copy traded. Yeah.
Yeah, yeah. Okay, okay. And so do you have plans to expand to four since technically passed four
Yes.
evals, or do you feel like that's too much risk at this stage?
No, not at all. Because prop firms are a pure ROI game. You get paid out more than you spend on them, and get uh get net positive on them. That's that's the goal, right?
Right,
If you
right,
spend, you know, um, if you spend like $1,000 on evals a month, and you're able to get paid out 10 grand or 12 grand or something, you know, you're 10 grand in payouts in profit. And if you trade under a business, you can write off the evals. I'm pretty sure,
yeah, okay, that's
right? It's
interesting.
definitely because a big problem of why I have only passed four, and I say only because really I've been a profitable trader on evals for this extended period of time. But the reason I've only gotten the four is because of just being scared to blow my first one. I was risking too light, taking too long, and that's been the biggest thing in the last couple months that has changed my performance. Is that I risk super heavy. I try to pass in as least amount of trades as possible to go straight to funded because all those good trading days, those good setups should be used on a live account.
Yeah, that's a good point.
Hmm.
So, kind of transitioning, I guess, from the prop firms. Like, do you have any plans, to eventually, I guess, transition away from prop firms and just have your own account through a brokerage and trade futures
Hmm.
or equities there, or even maybe go back to crypto? Or are you more the philosophy right now, if it's not broke, don't fix it, continue with the prop firms? Like, what do you envision, I guess, really over the next couple years for you?
So for the next couple years, I plan on continuing to play the prop firm game as long as the rules don't change. Treating it, as a pure ROI game. So like I said, if you could put $1,000 into something and make 11,000, you're gonna take that bet every time, right? And you find a way to expand on that, add more prop firms, more accounts. Apex lets you have up to 20, right? And they have 1 day passes. Top Step is like a lot stricter on their evals. You have to pass in two trades. So that's what I try to do. But Apex, you can have 20. So if you really have the capital, you know, the cushion, you can buy 20 evals and try to pass them in one trade. That's what a lot of people do. And it's just like,
Right.
okay, if you blow it, you blow it. You try again. because you have the cushion from being a profitable trader, and you know it's a numbers game. You know trading is statistics. If you have a 70% win rate and you lose 6 trades in a row, you're probably going to win the next 14, give or take.
Sure.
It's it's not the system that's broken. You have to trust a winning system, right? And that's why prop firms are so valuable to people with a high win rate, low risk to reward,
Right.
because it's like you rinse and repeat. Trading prop
Yeah.
firms is its own system in itself.
Yeah. No, that's well said. Appreciate that insight. Um, yeah. So, one of the things I want to do here, I know we're kind of pushing up on time. I know you sent me over some trade examples here. So I want to make sure that we have time to go through this here just so people can, get an idea. All right, perfect. So, you sent me two examples here. I believe one long, one short. So why don't you kind of
That's right.
walk us through this and explain a bit of your strategy?
All right. So I trade like, what people would call ICT concepts. Like my main drive is liquidity sweeps and fair value gaps. That's the basis of my trading. I use liquidity sweeps to gauge where price is going, like the bias, and I use fair value gaps to gauge if like where price wants to go. Because basically we all know that the market is highly efficient. It's always seeking to be balanced. It's always seeking its fair price. So that's why this strategy really makes sense to me. Because what's a fair value gap? It's an imbalance, right? An imbalance in price. And when price retraces into a fair value gap, it's then given the decision to disrespect it, go through it, tell you that price wants to go the other way, or it's going to respect it, hold it, and then continue the trend. So my trading is basically reversals and continuations. I'm either looking for price to continue through a fair value gap or reverse. And there's
Okay.
there's multiple different ways to do that. So I can see your screen, by the way.
Okay, perfect. So why don't you walk us through, I believe this first example on the S&P 500 E-mini is a long
Yep.
example, correct?
Short.
Or short? Okay.
Yep. I'm looking at it right now. I don't know if you want to zoom in on it.
Yeah, let me see if I can.
Yep. All right, I'll get right into it. So the the darker part is New York Open. That's 9:30 right there where the screen splits. You see the bottom where it says 9:30?
Yeah.
Yeah, yeah. So that's boom. That's market open. So as you
Okay.
can see on market open, there's that big wick that takes out these 1 minute highs. All right.
Right.
Boom. Price takes out those other 1 minute highs. So you're trading in a small 1 minute range here. But then you see price expands, right? Price expands up. Um, Kind of sweeps some other highs that aren't marked out on the chart because they're also pretty insignificant. But as you
Mm-hmm.
can see, price decides to reverse lower. It makes that big gap right there, that big 1 minute fair value gap,
Right.
goes low, continues low, takes out that 9:30 open low that I have marked out.
Mm-hmm.
And then it taps back into the fair value gap, right? And then now is the choice. Either it's going to close through it and create an inverse fair value gap, and then I would enter there, put my stop below, and then I would target the high, or it's going to respect it and it's going to continue lower to take out other lows. And so as you can see, and every single entry model too is based on inverse fair value gaps. That's how I have my win rate so high. I have about like a 73% win rate. I used to just take displacement out. So as you can see right there, right, taps the 1 minute and then moves away. I would have just entered right there, with or without the fair value gap. But as you can see, there's a tiny fair value gap right there,
Mm. Yeah.
and price closes through it. It closes through it. It runs through it. So that's like that extra bit of confirmation that All right, the bias is definitely going to be to take out the draws on liquidity lower.
Mm-hmm.
So boom, I enter after that 1 minute uh, inversion. I put my stop above the high, and then I target that 15-minute low from pre-market that I have marked out. And you see that internal low that was created right before? That's going to be my break-even point,
Got it.
or my
Got it.
after my entry. So once price takes out that low, um, I'm going to go break even. It's going to be risk-free, and then I'm going to hold till the 15-minute low, and then boom. That's about a 1.3 risk to reward, and I held this for 2, 3, 4, 5, 6, 7, 8, about 8 minutes. So in and out, right?
Oh, okay. So you got in right around here, correct?
No, at the
Like
entry, you see the gray line,
right down
in
here?
the middle.
In the middle,
No,
right here.
where the red and the green meet.
Oh, okay. Okay.
Yeah,
Okay.
that's my entry right there.
Got it. Got it.
So,
Okay. So that was your entry.
yep,
And
that's my entry.
can you just explain again what your target was on this?
My target is this 15-minute low. Uh,
Okay.
I have it labeled as 15-minute low.
Okay.
That's gonna be my draw. That's my target of where I think price wants to go.
Okay. Okay. And is that I'm assuming it's based off this earlier
Yes,
pre-market action.
yes,
Okay.
that's a 15-minute low because there's no other like higher time frame gaps to target.
Sure.
There's no London or Asia low.
Right.
Those
Right.
have been
Okay.
taken out in pre-market. So that was like the only draw that I could find.
Interesting. Okay, got it. And
Hmm.
then this example here
Now this is
on the
a example
Nasdaq.
of a reversal. That first one was a continuation. This is
Okay.
a reversal,
Okay, so walk us through this one.
right? So 9:30 opens, boom. One huge candle takes out London low. As you can see, London low is labeled in blue. At the bottom to the
Down here.
left, it says London
Oh, for some
on the
reason I
line.
can't see that. Oh, right here, right here.
Yeah, yeah,
Okay,
yeah.
my bad.
No, all good. Okay, so that's the London low.
Okay.
So boom, on open, price takes out London low, creates this huge 1 minute fair value gap, right? Price taps it,
Respects it.
moves away. It seems like it respects it, but you see there's no fair value gap inside that leg off
Right.
London low.
Right.
So there's no short entry for me. So I used to, in my earlier days, I would have just entered short here and got stopped out. But there's no fair value gap to gauge. Um, there's no imbalance, right, for price to run through.
Got it.
So
Okay.
I'm not entering short on that blue candle. I'm not entering
Right.
short there. But
Right. Okay.
I'm waiting for confirmation. And then what does price do? Boom, it moves up and it inverts the 1 minute fair value gap.
Right.
Boom. I enter on that first candle. I put my stop below the low of that candle. My stop is the red. The red is my stop loss.
Oh, okay. Okay,
So
got
you
it.
see my stop loss is down there.
Got it. Okay.
Boom, I put my stop loss down there and I target that 1 minute high from pre-market because I'm shooting for the low hanging fruit there. That's
Sure.
like, that's an easy another 101 trade right here. And then boom, I'm going break even at that first high. And I held this for 1, 2, 3, 4, 5, 6, 7, 8, 9 minutes.
And that
Nine
was a good
minutes
move. You
in
know,
and
you
out.
talk about going for the low-hanging fruit, right?
Hmm.
That's a good idea here because obviously hindsight's 2020, but we can see this entire
That's right.
move reversed on us. So
Right,
had
right.
you
I
like
could have
held
held.
this,
Right.
you know,
I
would have
could have
been
went for the
screwed.
home run.
So I guess, off you said the London low,
Yeah.
right? Are you watching the London markets or what are you basing this on?
So I'm getting on the chart at 9 a.m. and I'm marking out what happened in pre-market, you know,
Mm-hmm.
if there were some sweeps, if there's like a high time frame sweep um in pre-market, that kind of tells me the bias of the day, right? If
Got
we're
it.
going to be bullish or bearish. And maybe there is a high time frame draw that we're moving towards, and I'm going to look for a continuation towards that draw,
Got it. Got
right?
it.
But the
Okay.
biggest thing that helps my win rate too is trying to make sure the high time frame is in line with the low time frame. You don't want to trade against the trend.
Right. You want to have alignment. Yeah.
Right. I tried on Thursday. This Thursday move, I tried to catch the reversal and I lost it,
So,
you know?
on this 930 candle here, you would have had a short setup potentially off this fair value gap
Right.
had we seen follow through, but obviously, like you said, it
Right.
completely reversed. So,
But as you can
um,
see, there's no gaps in that leg up. After
right,
the first tap of London low, that
right.
leg up and back into the gap created no fair value gap. It's just, three candles into it with these long wicks created no imbalance. If it would have created a imbalance and then price would have went through it, I would have entered short, and that would have been a sign that the market is disrespecting uh, that imbalance and that it wants to continue seeking lower and that sellers are in control.
See, this would be tempting for me though, because I'm looking at this,
hmm
green
That
candle
huge,
here
that
moves
huge
in,
rectangle, yeah.
it moves into the fair value gap and
hmm
then, rejects, right? So to
hmm
me, this would be like a fair value gap being
Respect, yeah.
respected, right?
hmm
And then continuation of the downside is where my head would initially go if I was just
Right,
looking at those first,
right, right.
five candles.
And I would have used to have traded that way as well but that's where you have to differentiate a little discretion, right? Because what reason would price have to go lower there? It already swept London low, which in this chart example, that's the only significant low,
Mm-hmm.
right? There's not some low hanging fruit that is lower. There's not some strong draw. There's not like a 1 hour fair value gap
A
or a 4 hour
gap
fair
or
value gap, right?
right.
There's no significant points of liquidity that price would want to seek out lower,
So
right?
because of that, you were not inclined to go short because you didn't
Right,
see low hanging fruit there.
right,
Got it.
right. My plan going into the day was see how price reacts to London. It seems very obvious right before 9:30 that London low was ready for the taking, you know? So I'm gonna
So why
wait
do
and
you
see how price reacts off that.
got it, got it. Okay. And why do you call it London?
Because that's the London session low. That's the
Interesting.
low. That's the low of 3 a.m. to 7 or 6:30. I think it's 6:30.
Okay, got it, got it. So you're
Yeah.
taking into account, so essentially this is the low for the
Right.
futures overnight, right? You're just
Yes.
marking it out to know
Yes.
the context, right? Like this is
That's the
essentially
London
the
session
London
low.
session. Okay,
That's
okay.
the London
That
session low right there. And why is it
cool.
significant? It's not just a random spot. It's not just a random low, right? Because a lot of traders during London session might have their stop below the London low,
Right,
below that low.
right.
That's a significant low. That's a significant point of liquidity, right? And that's what I like about this strategy so much is that it makes sense, right? It's not just like, okay, price retraced to this golden pocket Fibonacci and then went
Yeah.
up, Even though Fibonacci's work because everyone uses them, there's no explanation of why that point may have more liquidity, more stop losses, right? Besides the fact that a lot of people use Fibonacci's. But
Got it.
this is a repeatable, explainable system. And this is why it's not gambling. I'm not just taking it because it's like, all right, 6 out of 10 times price reverses out of the golden pocket, you know? That's perfectly valid. People are very profitable with Fibonacci's, but there's no explanation behind it. It's kind of just a calculated gamble compared to actually understanding how the market moves and why it moves. Because you have to know two things. You have to know where the market's going and how it's going to get there. I know where it's going to go based on the draws, right? That takes a little discretion, but knowing how it's going to get there is equally as important
Mm,
for my strategy, right? And having a high win rate. And I use fair value gaps to determine how it's going to get there.
that's awesome. Well, Max, I appreciate you sharing those examples with everybody. I think that was fantastic knowledge and just good insight, right, on a particular strategy that's been working for you. Rinse, repeat. There's no reason to switch it up. You found something that
Yep.
works. Why move away from
Keep it
it? So
simple. Keep it simple.
I love
I try to
that.
overcomplicate trading way too much. And as soon as I try to make it as simple as possible and as repeatable as possible is when, everything started taking off.
That's awesome.
Trading is simple. Trading is simple. Just like
I love
everything.
that.
People know. Like people know that being in shape is simple, right? It's not easy, but it's simple. You go to the gym
Sure.
and you eat less calories than you burn, right? It's all very, very simple stuff, right? And people say like, oh, this trading doesn't work. Retail trading doesn't work because you're trading against people with finance degrees and XYZ. But it's like everybody knows the gym works and they still don't do it, right?
Very true.
People know
That's great.
trading works. They just don't do the necessary steps.
It's a great analogy. Very true. Simple things, difficult, but simple to do. But
That's right.
um, well, hey Max, I appreciate you coming on the show for this interview and just taking
Thanks for
time
having
out
me,
of your
man.
day to do this. It's been fantastic. I hope we can do it again soon.
Hmm.
And just so people can get in touch with you. I mean, do you have any socials or anywhere people can get in touch with you? Or kind of like I said at the beginning, if people leave comments on the YouTube video, are you open to answering any questions?
Yeah. I'll answer on my personal YouTube. I made a TikTok actually. I'm gonna start posting. I'll start with clips from this
Awesome.
podcast. Follow me on TikTok, Maximilian1R.
Awesome. Love it. Love it. All right, folks. Well, you heard it here first. It's been a very insightful, interesting interview. Again, Max, appreciate the time. If anybody has any questions they want to ask Max, feel free to leave it in the comment section here on YouTube, and we'll get around to answering those. But look forward to doing this again soon. Appreciate all the support as always. Make sure to like this video, subscribe, share with a buddy who's interested in trading or prop firms or anything like that. And folks, as always, remember, plan the trade and trade the